Welcome to Illuminati Silver. We tell it the truth about silver. Today is Saturday, the 29th of February 2020, and we're publishing our gold and silver weekly update for the week ending the 28th of February. Now, this past week, we've published a number of very important and pertinent videos. The last two perhaps being the most important in relation to the relationship between gold and silver. Yesterday's video was entitled Gold and Silver Prices Slump, Gold to Silver Ratio Rises to 95 to 1. And on Thursday, Gold and Silver Prices Diverge Further. Why? Now, we have placed links to these in the description box below. And in these videos, we express that whether gold and silver prices go up or down, for the moment at least, silver will perform worse than gold. And the reasons why this has been and will continue to be the case, at least for the near future. Now, gold fell $57 last week from $1,643 to $1,586, having hit a high of $1,689 and a low of $1,565. In sterling terms, gold finished the week at £1,237. That's down £31. And in euros, it closed at 1,438 euros. That's down 77 euros, thereby showing a degree of strength in the euro. Silver fell $1.83 from $18.50 to $16.67, having hit a high of $18.95 and a low of $16.41. In sterling terms, it closed at £13. That's down a significant £1.27. And in euros, it closed at 15.11 euros. That's down 1.94 euros. The gold to silver ratio rose substantially from 88.8 to 1 to 95.1 to 1. The Dow Jones closed on Friday at 25,409, down 357 points on the day, and down a significant 3,583 points on the week. The Nasdaq closed at 8,567, up 1 point on the day, but down 1,009 points on the week. And the S&P 500 closed at 2,954, down 24 points on the day and down 383 points on the week. The oil market fell similarly. Brent crude closed at $49.67, down a most significant $8.83 on the week, and WTI crude closed at $44.76. That's down an equally eye-watering $8.78 on the week. The dollar index stands at 98.13. That's down 1.13 for the week. Now, we concluded last week's update concerning gold in particular with the following words. Now, whilst we can see silver going higher, we suspect that it will not outperform gold this week. If trade expectations are lower, then its industrial demand will be lower. But we admit that silver has a lot of catching up to do. It will find $18.50 quite resistive, but if gold hits $1,700, then silver will hit $19, though there has to be quite a lot of bad news for that to happen. Well, the start of the week, we did actually see gold rise and peak on Monday, hitting $1,689, only $11 short of that magical yet important $1,700 level. With silver at the same time rising to $18.95, some 5 cents off the $19 we said could very well happen. Both about to fulfill our prophecy, and then they both came tumbling down. Since the start of the year, and before the coronavirus fear took hold, we stated that we expected gold to operate within a range of $1,500 to $1,600, with $1,450 to $1,650 being outliers, and silver to oscillate between $1,750 to $1,850, with $17 and $19 being outliers. Now with gold at $1,586 and silver at $1,667, we're now again entering December lows for silver and January lows for gold. So gold has fallen 3.5% this past week, and silver has fallen an incredible 9.8%. Unfortunately for some, much in line with our divergence theory. But to be fair, a faster fall than even we were expecting. We did think that these falls would occur, but they might have been spread over the course of a couple of weeks. Now, some analysts are suggesting that Friday's fall for both of these metals, and in fact for all metals really, precious metals, were inexplicable. Not totally convinced that profit-taking alone was sufficient to see such a large decline. Now, it has been mooted by some that the fear of a global economic slowdown was so great that the Fed plans on cutting interest rates this weekend in a surprise announcement, and therefore needed to smash gold prices down in the knowledge that once rates were cut, their prices would rise back up again, rather than witness a meteoric rise beyond which the Fed did not wish the price of gold to go. So it was necessary to cut the price down before allowing it to go back up again. Now, whilst this is indeed possible, we're not ruling that out, we prefer the theory that actually what has happened is that with the Dow and other equity markets or bourses falling this past week, the Dow over 3,500 points, its worst performance since the crash in 2008, the traders had to cover losses and margin calls, and therefore sold gold in order to cover these liabilities. Because even they, perhaps expecting markets to fall, did not expect such a major decline, and were caught short of liquidity. Now, this could indeed be true. Now, in addition to that, though, serious panic could now be setting in. And something that we have said time and time again is if the recession is going to bite hard because of the recent collapse in trade, the demand for commodities, and especially silver, is going to fall drastically, again causing its price to collapse. But this is not limited to silver alone, as we could see that on Friday both platinum and the recent rising star, palladium, also fell in price, and not to mention the fall in the price of oil. Now, we're not going into the technicals today for either gold or silver, as something more important is really at play here, and frankly the technicals are not going to particularly help us either way. Now, I know some technical analysts will disagree with us. They will demand that it is critically important we look at certain support and resistance levels, and whilst under normal circumstances we would agree, as we say, something a little unusual is at play here, and therefore we're not going to give it necessarily the important attention that we do normally provide the technicals with. You see, if the Fed does actually lower rates this weekend, now we do not think that it will, but we have to accept it as a possibility, because we really believe it's more likely to wait until the next FOMC meeting on the 17th and 18th of March. But if it does, then we may indeed see gold and silver prices recover. But if the Fed does not, and equities still continue to fall, we may see their prices fall further, even though that is paradoxical to what would normally happen. And silver prices holding above $16 will be most unlikely. So Monday will be a very important day. For those who stack silver, there could indeed be a very good buying opportunity ahead, especially if the price falls again and does fall below $16. But if you do buy, you must be prepared to hold for a little while, as the precious metal, that particular precious metal, may take a while to recover to give you the sort of returns that you may be looking for. On top of what is happening in the geopolitical sphere next week's economic data, of which there is a lot, will also have quite a significant effect. Let's take a look at what is actually being reported next week. On Monday, we have the market manufacturing PMI for February, the ISM manufacturing index for February, and construction spending for January. On Tuesday, motor vehicle sales for February. Now, Wednesday, the ADP employment report for February, which will give us some indication of what's likely to happen in the non-farm payrolls on Friday, and the market services PMI for February, and the ISM non-manufacturing index for February. Now, Thursday, we have productivity for quarter 4, unit labour costs for quarter 4, and the factory orders for January. And on Friday, non-farm payrolls for February, unemployment rate, average hourly earnings both for February, trade deficit for January, wholesale inventories for January, and consumer credit figures for January. So obviously, although Friday is the biggest data day, there is a lot being announced most days, all of which can, and we believe will to some extent, influence traders one way or the other, which is why next week's prediction is going to be a little tough. Now, tomorrow we shall be covering a number of articles on gold and its fall on Friday, and similarly the same with silver, just to give you the opinions of others in this regard. What is worrying is that equity markets are still falling, yields are falling, and the dollar index is just about holding its own at the 98 level. All of these factors should be good for gold and silver, and we should see their prices rise, not fall. Now, we suspect that in time gold will gain traction again. But with a gold to silver ratio of 95:1, and despite it being at virtually a record high, we're still not convinced this has peaked. And the more the bad news about global trade is conveyed, the wider that margin will become. So, next week, if the Fed lowers rates either on the weekend or early next week, the gold and silver price may very well recover. If it does not, and I suppose we would probably say we're 65-35 against it lowering rates next week, then they may indeed have a little further to fall, especially silver. Now, this may prove to be a wonderful buying opportunity for those who've missed out in previous times. So please stay tuned to our videos. Next week is an important one, and it would be a shame to miss out on any developments. Also tomorrow, we will be publishing a comprehensive update on Richard and Greg. We were going to do this today, but we've received some late notice news of some disturbing trends which we wish to include, and therefore would rather include that information and publish it tomorrow. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, press the bell sign so that you're notified of videos as and when they are published. By all means, do listen to the last 2 videos we've produced if you haven't already done so. And meanwhile, keep safe, use the necessary protection products, and have a great weekend, as next week we suspect will prove a most interesting ride. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com. And if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.